Hey, I got Nate here, Christian, Victoria, and Dominique will be joining us here shortly.
Most of our content is, of course, around marketing and how to build your practice and grow your various digital footprints. But today we brought on Dominique, who is a really longtime friend of mine and has been somebody that we've been to her events many times, spoken at various things. She is one of the OG TaxProMarketer clients back when she was practicing way back in the day and when we were not oriented as much around digital marketing and we were doing mostly offline snail mail marketing. She was a client and we have been longtime friends, and I really appreciate her voice in the industry. She's developed a reputation of being one of the top uh, teachers and explainers of tax code changes and how to build a tax planning practice that helps you to charge for what you're worth and gets you out of compliance and into more planning type work so you can up level your actual clientele and do the kind of work that a lot of us got into this industry so that we could do. That's really one of Dominique's great specialties. In addition to, she's very zealous about keeping track with the tax code and all the changes and the congressional curveballs that come at us pretty much every year. We've had Dominique with us many times in the past and get a ton of amazing feedback whenever we do.
Yeah.
So Dominique, glad you're here. Glad you're able to join us for this. Thank you for your time and serving our community in this way. So maybe say hello.
Well, thanks for having me. I appreciate you very much, and it's great to see you both. And of course, there's no shortage of these types of updates that bring us together. So we're lucky in that there's always some new thing that we've got to learn as tax professionals. And of course, you mentioned, Nate, my specialty is looking at these things and not only saying, all right, how in the heck are we going to get all of this work done when you're already maxed out and stressed out and burned out, but how do you do this with the utmost service for your clients? Because it's not their fault. They really deserve to have good service, and it's not their fault the government keeps coming up with these things. I know there's a lot of chit chat about this, and so I'm excited to bring this content to everybody today. All right, everybody, you're in the right spot. Here's the thing, and some of you will recognize the humor in this from my good friend, Mike Gordon, who is a real sweetheart and sent me some slides and info for today's presentation. Yes, they are trying to kill us. That's what this is about. So we've got a lot of stuff to cover today. And of course, it's not unlike one of the other most recent years where we've had lots and lots of stuff just kind of dropped on us. But I'm going to explain why this can be a really good opportunity for you. Of course, this is current as of today. We're continually getting new guidance. There's also going to be some issues related to the state where you're practicing. And the state you're practicing in depends on where your client is located. So just be aware of that, and I'll be giving you some pointers about who to contact for more clarification as we go along. But this is what it's all about. It's our beneficial ownership rules, or we're calling it BOI. And it's not suddenly something new. They dropped it on us in 2021, and you might not have noticed. It was our Corporate Transparency Act, and we were up to our eyebrows with PPP and EIDL and ETC that you may not have noticed because it had a due date of January 1st of 2024. So if you're like me, you see a due date that seems like it's far away and you go, oh, I don't have to learn about that right now. And a lot of accountants have done the same thing. But again, it's not anything to be afraid of. So I'm going to walk you through step by step. What does the form actually require? And it's not going to be that bad. The real key is, should you be offering this service? What good will it do for you and for your clients? How to protect yourself, and we'll be talking about the risks as well with this requirement here. So like I said, my first instinct when that came out was, I don't need to deal with this right now. I've got a lot on my plate going on with CARES Act and all that stuff going on with COVID. And so a lot of accountants just ignored it And it's not technically related to finances necessarily. When we looked at the agency that's in charge of this, it's not the Treasury or the IRS. And because it's FinCEN, a lot of accountants have gone, it's not my responsibility, but I'm going to tell you why it could be helpful for you to get involved. It's all about FinCEN, Financial Crimes Enforcement Network. And the Corporate Transparency Act basically requires business entities to provide information about what they call beneficial owners. And I'm going to help you understand what does that actually mean. And it's the Financial Crimes Enforcement Network that we're dealing with right now. It's a government agency. It's operated under the Treasury. So you can see it's tax adjacent because IRS also works under the Treasury. But I think it's just good business, folks, because who else is going to tap your client on the shoulder and let them know that they can go to prison or have really severe financial consequences of not abiding by these rules? So the due date of this I mentioned is January 1st, 2024, and I'll get more specific with that. Congress gave us a little delay as they tried to figure out what exactly do all these things mean and to get a draft of the forms done. And a lot of accountants, because you can't possibly think of taking on one more thing included for the low prices of doing a tax return, we continue to put our head in the sand. And I had to use this because if you've never seen a sea lion up close, they are so cute. They're like dogs. They behave like dogs. I've had one sitting next to me, sitting. He was like eye level with me. They're really cute. It didn't dawn on me later that he probably could have killed me with one swipe of his little flipper paw thing with claws on the end of it. But don't stick your heads in the sand because this is a really good opportunity. Here's the penalties. If you have a failure to advise the client, think about this from their perspective. If they don't do the reporting, they want to find someone to blame. And so if they suffer a loss, i.e. a penalty, or maybe the bank doesn't give them a loan, it can be traced back to non-compliance to the CTA, the BOI requirements, and they may allege that you failed to advise them. So to protect yourselves and to help reduce the likelihood of that happening to you, I want you to strongly consider sending a newsletter or some sort of notification letter to all your existing clients, informing them of the Corporate Transparency Act and its reporting requirements. Make sure you keep a copy of that. So if you're doing it through your email newsletter, make sure you're archiving a copy of that as well as the distribution list so that you can prove that it was sent later. In addition, unless they've specifically engaged you to provide that Corporate Transparency Act assistance, you want to make sure that you include a provision in all your engagement letters, regardless of the service that you're offering, where you specifically disclaim responsibility to do that filing. So I'm telling you here, if you want to be like the sea lion and continue to say, I'm just not going to offer this service, and that can be for whatever reason you want. It could just be you don't want to have to deal with it, and that's fine. I'm just making some suggestions that you protect yourself because there could be a lot of litigation around this, and it helps that whole, you didn't tell me, and I know I might have said no to you, but you didn't offer it to me. So protect yourself and make sure you're getting that on file.
Can I ask you, how often does that kind of litigation actually occur? Like, what's the genuine risk there?
I mean, you can
failure to advise.
You can check with your professional insurance carrier like E&O, but that's why we have E&O, right?
Right.
If it wasn't a real risk, we wouldn't all spend thousands and thousands of dollars on that. And I think it's more our culture. You know, do we live in a culture where people want to place blame and say it's someone else's fault for, you know,
Very good
something
point.
they failed to do? Yes, they do. And on top of that, it's just another thing where people think that they can get money, and especially when they think that you have insurance. And I'll just share a really quick story about this. Long time client. For 20 years, I had this client, and I was on the stand testifying in this client's behalf. And he texted me while I was on the stand and said, "Hey, just a heads up, I'm going to go ahead and file a lawsuit against you, but no big deal. It's only going to go against your insurance. It won't hurt you personally." No actual claim, just this belief that he could
Oh my
get money
gosh.
from my insurance, and I hadn't done anything wrong. So I actually just told him that I wasn't sure that the insurance would cover what he was planning on doing, and that it would really be harmful to me, and he never did anything about it. But it's that thought process, right? So here's our Corporate Transparency Act. A lot of people want to be the seal and keep your head in the sand and are saying, well, hey, it's unauthorized practice of law. So let's talk about this. There's not a super clear delineation about which professional is responsible for this. It's sort of like, you could also make this argument about some of the foreign tax filings, like our Form 114 filings, for example. Although with that, it's a little more clear because it's a tax form, but some people nevertheless say, well, it's unauthorized practice of law, I'm not going to do it. That's really dependent on the state that you live and what their bar rules are. So call the state bar where you reside, and more importantly, where your client resides. So if you've got people in multiple states, do the legwork, make those calls. Also contact your insurance carrier. They can be a really good source of information for you. We kind of always go towards Circular 230 and we say, hey, you know, it doesn't really fall under practicing before the IRS, which is where Circular 230 comes in. But it does help to understand your risk. And I'm going to be pointing that out as we go along today too. So let's talk about who has to report. The B in BOI, beneficial, is who has to report. So it's generally U.S. entities, corporations, LLCs, or similar. Here's the key term here: registered with a state secretary or similar office. Okay, so we have had a lot of discussions, and by we, I mean the community, about, okay, what about a sole proprietorship? Does a sole proprietorship count? And unless you're filing some sort of reporting with your state secretary for your sole proprietorship, then it would appear that sole proprietorships do not count. Now, here's where we get into some gray area. What about single member LLCs? Single member LLC, we report on a 1040 Schedule C because it's disregarded. But think about it. How did you open that LLC? What reporting requirements do you have on an annual basis with the state secretary office? That's the giveaway. So if the entity doesn't file with the state secretary, you don't have to file. There's also 23 different exemptions that exist, and I'll get into those. Foreign entities that are formed abroad but are doing business in the US, they also fall under this requirement here. If we get into the reason, it's the terrorism fight. It's that they want to have a better understanding of who is transferring money and conducting transactions. And for a long time, people have used business entities and trusts as a vehicle for concealing the true identity of who's benefiting from something. So that's why they're doing this. They want to get clarity over who's doing transacting within the US. So here's our exemption. So the first thing I would do is ask myself, do they have a filing requirement with the state secretary? Let's say you say yes. Now we look here to see, do they fall under an exemption? You say, please fall under exemption, please fall under exemption, please fall under exemption. Unless you're doing accounting for banks, credit unions, tax exempt organizations, those probably are not going to apply. What's most likely going to apply to you is this one right here that says large operating entity. Large is subjective when it comes to business stuff, right? We've got lots of definitions. In this case, it's more than $5 million in annual gross revenue and more than 20 employees with a physical presence in the United States. How do you know if they have a physical presence? We're looking for brick and mortar sales representatives. Think about our old pre-Wayfair Nexus rules. So this would be sales representatives that might go and sell door to door, company to company. That kind of physical presence is what we're looking for. So large company. Here's our 20 full-time employees. That's the definition there. So full-time, that's 30 hours a week or 130 hours per month. And we can do the full-time equivalent. You should all be pros at that now because of COVID. So I don't have to explain to you how you do that. And then we've got that physical presence requirement here. And here's how you can think about that. You look at their most recent tax return showing more than $5 million in gross receipts. Boom, you've got a large operating company. They're exempt, don't have to file. Why are they doing it? All these things on the list. They just want to have, they're nosy. They want to have more insight into where money's going. Is it coming from terrorist organizations? Can they get some tax fraud information? Maybe, but the big one on this list is the terrorist information. It is basically going to create the largest database in the country for this type of information. They know that people use so-called shell companies so that they can hide identities. And it's not always a nefarious reason. Sometimes we do that for righteous reasons, for asset protection, for example. But even though none of these things are new, they want to know and have that transparency. So that's the T in the CTA. All right, primary goal, just to shield assets from tax, run businesses that make it difficult for the IRS to identify you. They want to strip that down so that they know what's happening here. So let's talk about beneficial ownership. That's the key, beneficial ownership, BOI. Anybody that's considered to have substantial control, which is defined here as at least 25% ownership interest in a reporting company. So remember, reporting companies, Secretary of State, right? Substantial control. We also have some other regs that we can look at for how to define that. Here's where you get those rules, all right? Reporting rules, volume 87, came out Friday, September 30th of 2022. You can see how vast all of this information is. What I would recommend is there are a set of FAQs. I'm going to direct you to them today. That's the easiest place to look at right now. It's also been the most recently updated. So those are dated in November of 2023. When? Here's the due date. For new entities, starting after January 1st of 2024. If I go out now and I open up a new entity that gets reported or recorded with the state, I now have a 90-day extension in 2024, and I have to file within 30 days. So think about this as going forward, it's going to be a part of that normal paperwork. Think about when you form an S Corp, some of your normal paperwork is going to be the articles of incorporation. Maybe there's an election form 2553 in there and the BOI requirement, right? Obviously, you won't know if you fall under the exemption for the large reporting entity. So your first year out, you're going to have to file because you don't meet that exemption. Existing entities, and this is where all your clients come in. Now is the time. The due date is January 1st of 2025. Listen, make it easy on yourself. You are going to have communication with 100% of your clients between now and April 15th. Even people who go on extension, you will have communication with it. Get it over with. Just get the data that you need. It's not that big of a deal. That way you have it. It's not sitting in, a pending file somewhere or a WIP file somewhere or a missing information file where you're hounding people. That's probably going to be your biggest obstacle to getting this done. Once you've filed that, anytime you have changes or corrections, what they're calling updates, you have to file a report within 30 days. Now, that doesn't just apply to mistakes that you want to correct, because notice this also says updates. So that's a tricky one. We're going to get into what does that mean? What kinds of things get updated? It's kind of stinky news. I mentioned here, you were slated to have 2 years to file your first report, but it's 1/1/24 as of right now. So they shortened that to 1 year. If you thought it was 2 years, sorry, it was 1 year, and that's where that comes from if you're confused. All right, 90 days after receiving the actual or public notice that it's effective. So you file that paperwork and usually you'll get a stamp and then the paperwork comes back from the state. That starts the clock for the 90-day calendaring right there. And then remember 30 calendar days to report any changes. And the penalties are swift and they are severe. That includes updates as well. So think about this. Let's say one of the owners or beneficial owners, which we'll go into, let's say someone passes away. Let's say a business interest is sold, bought, you promoted, so you're awarding a business ownership interest to an employee. Those would all count as updates that are required, and it has to take place within 30 days of that. So let's just say that you have a client, they're filing a single member LLC, gets reported on a Schedule C tax return. They started the company back in 2005 and they had an attorney in town. Let's just say his name is Smith, formed the LLC initially. Technically, Smith is a beneficial owner of that company because he assisted with the initial filing, okay? This LLC does not meet any of the exemption criteria. So under $5 million or under 20 employees. Therefore, it's considered a reporting company. Since the person's an existing entity, he has to file that BOI form. Fill it out, send it in online, list the beneficial owners. It includes the owner of that company themselves, and list the attorney Smith as company applicant. All right. Now, let's fast forward a year and say on March 15th, the attorney dies. How will the owner of this company even know that the attorney has died or any other change? Now that's the owner. Now I want you to ask yourself that question. How are you supposed to know that your single member LLC's attorney died or is no longer the attorney? So this is going to require a lot of communication, and I'm just going to emphasize proactive work style on your behalf, okay? So we talked about the due dates, but here's the thing, 11.4 million forms, that's the quantity, that's just for updates, are estimated to need to be filed every year. So it's massive amounts of effort. And this is the question, how can people track all of this stuff and why should we even care? Well, this is why. 2 years imprisonment, that's your worst case scenario. $500 a day penalty for being late, up to $10,000. Now, folks, This is FinCEN. This isn't the IRS. So I want you to really keep that in mind. We're used to the IRS being on a slower timeline. Maybe it takes them a year or two to catch on. I can't comment on how long it will take for them to enforce this because it's new. We don't know. But avoid this. Avoid this for yourself. Protect yourself. Put a clause in your engagement letter that unless you're specifically engaged, and then if you're going to do it, just make sure everybody knows what these consequences can be. Here's where it gets filed. This is the homepage of the fincen.gov website. And what kinds of things do you need? Very, very simple. Name, business address, the jurisdiction where you're formed. So that would be the home jurisdiction and any jurisdiction where you have been registered as a foreign entity. So that comes into play whenever, let's say I'm in California, but I have a Nevada corporation, and that's for asset protection purposes. I don't have a physical presence in Nevada, but the home base of my entity is Nevada. I'm registered as a foreign entity here in California, so I'm going to be reporting both of those jurisdictions. Anywhere that your client's doing business, they should be registered as a foreign entity. So that might get listed there. And then look how simple this looks. Just, the stuff you already have. Here's where it gets hard. Beneficial owner information, personal details, and identification documentation. This is where it gets tough to collect. So when we think about, okay, what obstacles are there going to be to me doing a really good job for my clients? The bottom one is it, right? This is not usually something that we have on file. It's not usually something we collect as part of the tax return prep process. I want you to be thinking now about how can you alter that process to make sure you get this, okay? If you're using portals, if you're using tax organizers, if you're using email to communicate, I need the following things, get that in now. Because again, the reminder is these penalties are very, very severe, okay? This is laid out. I've laid this description out just like the form is. So it's actually very, very simple. You're going to say why you're filing the form. Are you updating or is it the initial report? Name, ID, jurisdiction, when you're preparing it. And then here comes down in here, the reporting company. So name, tax ID number, jurisdiction, basic address, right? Now we come into part 2, and that's going to be your company applicants. You might have to say, we don't know. We're not able to identify that for some reason. Maybe you don't have a tax ID number. This might come up for somebody who's not a resident, who doesn't have a social security number or an ITIN number. Their date of birth, their current address, their form of identification. So that it could be a passport, it could be a driver's license, but you're going to need to document that number, okay? Jurisdiction where it's issued, image of the document. Yeah, if you're not in the habit of getting that from your clients, and just know it's not just for them, it's any beneficial owner. So you're going to have to get used to asking this for other people. And so this is the third part here, every beneficial owner, which I'll define for you, okay? Now, here's those FAQs that I was telling you about. I've got some links in this. You can just go to fincen.gov, FINCEN.gov, and then do a /BOI-FAQs, plural, FAQs, plural. They've got a nice, healthy set of Q&As. It's easy to understand. It addresses most of the things that we're talking about as a community, trying to figure out and get clarity on what does all this stuff mean. Most recent date was November of last year, so it is the most recent clarification we have. Treasury basically dumped it on FinCEN to define all of these terms. So you might also find some slightly different definitions for terms than what the IRS normally uses. because the IRS didn't define these. So who is a beneficial owner? Anybody who is considered to have substantial influence or control over an entity. So we need to understand, what do they consider substantial control? So that's the reporting company. Do you have control over the expenses, the investments, the borrowing? So can I sign on behalf of that company for a loan or a commitment for that company, or to sell any of the company assets, right? Close the business, open a new line, say how much people get compensated in the business, amending any of the official documents for the company. You can see where that means substantial control, right? Think about it like this. This is not what it says, but I'm going to draw a parallel. Think about your trust fund recovery penalty people that are responsible for that. You know, if I'm doing CFO services that are contract and I have the authority to direct payments, say through a bill.com or the QuickBooks payment method, I might be considered to have substantial control just as a contractor, as an accountant. So for that reason, this is my advice on trust fund recovery as well, is really think about what role you're stepping into when you take on some of those responsibilities. And just ask yourself, am I being compensated enough for the risk that I'm assuming? Folks, we need to get compensated for that risk. We don't often think about that for ourselves, but you know, what we were talking about earlier with getting sued, it doesn't even matter if they're in the wrong and you're in the right. It's a pain in the neck to go through that process. And you have to be compensated just in case. You have to be compensated to hold on to documents longer than the retention policies. You have to be responsible for being in the know of all of these things and keeping people on track. So make sure you get compensated for that. All right, beneficial ownership. There is a great FAQ on this. And here is the question that we all want to know the answer to. Is a reporting company required to use an attorney or a CPA to submit the BOI to the FinCEN? Big answer and short answer, no. No. Now, a lot of companies can do this themselves. You just saw the whole form. 3 parts, very basic. It could be lengthy depending on your beneficial owners, but you could just inform your clients and say, go to fincen.gov and here's where you're going to file this. Here's the due date. And that might alleviate some responsibility for you. Still document so that you can prove that you told them when it's due and that they need to do it, but they don't need to use the help of a professional. Okay. However, I want you to ask yourself this question again. If you're not tapping them on the shoulder to let them know about this, who will? The local anchor person at the news desk, they have been reporting on this, but they're not going to bump into your customer at a grocery store and say, don't forget to do your BOI reporting. Let's see other professions. Doctors, probably not. Pastors, no. Insurance salespeople, maybe, maybe not. We are that resource that happen to see people more frequently than they see a lot of other types of advisors. So it would just be good service for you to offer this and also, or make sure that they know about it. Okay. And that leaves a lot of people kicking and screaming about that. You might be kicking and screaming with joy because you go, great, not on my plate anymore. Someone else can do it. And by the way, I'm not suggesting you do this for free at all. Here's another FAQ. Are certain corporate entities such as trusts, business trusts, or foundations, are they considered to be reporting companies? And here comes our favorite answer. It depends. It depends. So when we look at the trust, foundations, your litmus test is always going to be, did they file a certification with the Secretary of State or a similar office? Okay. Same thing with any kind of foreign trust or a foundation. Did they file as a foreign operating organization in that jurisdiction? Then you're going to need to file. That's all determined on a state by state basis. They decide what their rules are for operating and doing business in the state. Now, not every client follows those rules. I'm sure you've all seen businesses that didn't do their reporting. They're registered in a different state, but they're open and doing business in the state where they are. Doesn't get them out of the reporting requirement, but this is the test we can use, okay? Special rule here on trusts. If a trust is created in a U.S. jurisdiction that requires that Secretary of State filing, then it's a reporting company, even if they haven't filed that required reporting. So it's just the test, not if they've done it or not, if they're required, okay? Another FAQ on beneficial ownership. Do they require, does the state require a foreign entity to register with the Secretary of State? That's your test, okay? If they have to, yes, they're going to be considered a reporting entity unless they meet one of the exemptions that we discussed, okay? So the most common exemption you're going to see, and I'm going to see, is going to be that large unit exemption. Trusts, I talked about that. If it's like a standard trust, the states don't generally require you to register trusts with the Secretary of State. So typically, no, you're not going to have to report on like your revocable trusts, and even a lot of irrevocable trusts you won't have to. They're not considered reporting entities. Now, let's get into this because some people have already weighed in. They're crying foul play about accountants and lawyers. This beneficial ownership is crazy because it might include the entire board of directors. It might include any and all managers of a company. It might include trustees of a trust if it's a reporting entity, and anyone involved in setting up of the business. So accountants and lawyers can be considered beneficial owners. They don't generally qualify, but it depends on what work is being performed or what has been done. So if you've done an ordinary arm's length advisory service to a reporting company, that's not considered substantial control. Even if you've been designated as an agent of the company, sometimes tax firms will offer registered agent services. We see this more in attorneys' offices, but I've seen some tax offices rather combine it in subscription services that they offer. That alone does not constitute a beneficial ownership reporting. However, there is a reporting requirement for officers of the company. And so if you're in general counsel or if you've been like a CFO, you're going to have to list yourself as a beneficial owner. And that comes right here from this FAQ on beneficial ownership here. So the small entity compliance guide has a really cool checklist that can be handy to determine whether someone is considered a beneficial owner. I want you to remember family. Think about all of the related party attribution rules when we talk about beneficial ownership, okay? That can mean spouses. That can mean children. That can mean grandchildren. From our attribution rules, these apply to S corporations and other types of entities, depending on what attribution rules they follow. It's typically lineal descendants. So it's going to be my grandparents, my parents, my children, my grandchildren, okay? Brothers, sisters, aunts, uncles, cousins, you're going to be okay. But think about spouses. And when we define here substantial control, well, think about spouses. My spouse might not be a signer on the checking account, but if they're considered a beneficial owner, then they have to be reported just through relationship, okay? Is a reporting company's designated partnership representative or tax matters partner considered a beneficial owner? So I want you to think about and picture the partnership return for a minute. Remember, we're going to designate that tax matters partner there. Whether or not they're considered a beneficial owner depends, and it's always going to come back to that substantial control issue. Are they related in any way to the partners that own the business itself, or do they have the ability to think about hire, fire, commit to liabilities, sell the company, set salaries, etc. Again, that small entity compliance guide has a lot of information that's very helpful in determining that. You could be exempt from that just because if that's the only role that you play in the entity and you don't have control over anything else. Think about it. Maybe I'm a minority owner. I own 10%. So that's not considered substantial control, but I do happen to be the tax matters partner because of my tax knowledge. I still could meet an exception, but it always comes back to the substantial control issue. Okay. Can a company applicant be removed from a BOI report if they no longer have a relationship with the reporting company? The answer is no. So think about what this means. I gave an example earlier about the attorney. You change attorneys. It happens all the time. People change accountants, and they may have been the people who filed that initial paperwork. But think about it from this perspective. Even if in my example with that attorney that passed away, they're still always going to be on that initial filing. Now, if you live in a state that requires a registration information document on a regular basis, it's not that different from that reporting requirement. Remember, every year you're going to make a filing with the state that requires you to list out the directors of the company itself and the executives of the company. You don't necessarily notify them when somebody quits or moves on to something else, but they're memorialized. They're always going to be reported. So you don't go back and strip their identity from ever being connected with that company. Okay. So now that it's January 1st, 2024, if they were involved, they're going to get reported and it will remain memorialized that way. Do you have to annually report that beneficial ownership information? No. No requirement unless we have to report a change or a correction. Okay, so that initial BOI report is going to be filed. Again, it doesn't matter if the people died, retired, sold, whatever. They're forever going to be memorialized in the FinCEN system. Doesn't mean that it's current. Okay. Now, could they ask for it to be current? Possibly in the future, but as of right now, there's no requirement for that. There's lots of questions about different logistics about taxpayer identification numbers and things like that. Like, what if I don't have my EFIN yet or my TIN within the 30-day limit to actually meet that filing requirement on the deadline there? And so remember, we've got the online application to get an EIN number, and you should be able to get that back within the 30-day requirement. Now, let's say something complicates the matter. Maybe you have a foreign partner that doesn't have a social security number, for example, and you have to file a paper request. You can write applied for on your FinCEN report and still make the deadline. So just know this, do not hold that filing up for any reason. I'd rather see you do a correction later than miss that deadline because the penalties are so severe, okay? Should it include the historical beneficial owners of that reporting company, or do we only list that at the time of the filing? So this really applies because we're sort of playing catch up right now, that existing entities basically have to file to start us off and get all of that. So that initial report is only going to include the beneficial owners at the time of the filing. So let's say you used to have a partner 5 years ago, they no longer own any part of the business. It only goes by who the beneficial owners are at the time of that filing. So think about it. If you know that there's some changes coming up for the business over the next 12 months, you might want to hold off on filing that until those major changes are done, because that won't get included in the report. Okay. Let's see, let's talk about related companies. If I own a group of related companies, can I consolidate employees across so that I can meet the large business unit exemption? No. Goes on a per company basis, 20 full-time equivalent employees. Remember, they count 30 hours a week as full-time. And that's what the rule says. So you might have one business entity that has the same owner as a second entity, and one meets the exemption and one doesn't. Really stinks. How does a company report to FinCEN that the company is exempt? Well, you don't need to report. So if you've always been exempt, you don't need to report. If you file that initial filing and later you qualify for the exemption, then you file your updated report to report back to FinCEN that you're newly qualifying exempt, and then you won't have to file again. So that's how that works. So you may have somebody right now that's doing that initial filing and they qualify. New filers going forward are probably going to have to report, because you have no look back period to see if you meet the millions requirement, $5 million. All right, so the big question is, how do we get this done? They keep piling on and piling on. FinCEN estimates that this year, first year of the new reporting rule, over 25.8 million reports will have to be filed, and get this, at a cost of over $1 billion. So let me just tell you, they are expecting to have to pay for this service. The people that created this work are expecting there to be a cost with this. There should be a cost with this. There's additional liability and responsibility and data that you are taking on when you take on this project. Going forward, it's estimated that over 3.2 million initial reports will need to be filed each year, and 11.4 million updated reports will need to be filed each year, the cost of which is estimated to be around $364 million. So it's a lot. It's a lot of documentation. It's a lot of responsibility. Only you can decide what's best for your firm. My suggestion to you is to change how you're running your practice. If you don't already have information like this, or real-time access to this type of information, think about how much easier your life would be if you had regular meetings with people in real time, so that you can go, hey, you've got a 19-year-old son, I'm going to need their driver's license number, a copy of that, their date of birth, and their full name and their address for the BOI reporting. Say they don't get it to you. You meet with them next quarter. Hey, just following up, remember, we met last month, or we met last quarter. Do you have that information? Oh yeah, let me get them on the phone right now and I'll just get it for you. It's just far easier to collect that data rather than chasing later, when you're under the gun, you're under a deadline, and now your profit margins are completely blown because you've charged for it, but you didn't count how long it was going to take for you to gather that. So for those of you who are already doing a bundled service, subscription-based work in your firm, then you may think about covering this under that umbrella of services. And that really gets you out of that real issue of how do I communicate that there's this other fee now, and when and how am I going to get that paperwork? And my client's probably going to be unhappy. I'm proud to say that in the last handful of years, we've had a lot of this stuff really pop up last minute, and it's been a new constant in our lives. We've had new basis requirements. We've had new K-3 reporting. There's CARES Act, PPP, EIDL. But on the maintenance package, on the subscription model, something like this is not going to break your profitability. It just means you aren't nickel and diming your client. Now, let's talk about fees if you don't have a subscription model. Maybe you implement a pricing increase and you include this as part of the reason for your pricing increase. I always like to approach fee increases with added value, added additional services. And so you might think about it like this, your fee for your services this year is blank, and I'm excited to share with you that's going to include your brand new FinCEN reporting that's required with very steep penalties. We're going to include this all inclusive with your tax return, and it's due on this date. What a great message that you're sending, that, hey, we've got you, we've got your back, we're going to cover this for you. I know there's a lot of you listening to this today who've expressed that you've experienced stress and anxiety about doing a fee increase or having to let somebody know that you're charging more. Don't put yourself through that. So let's just say that you've got an opportunity to onboard somebody for some other services. Maybe you've just been doing prep and now you want to get into planning, for example. Use this as an opportunity. You can call and say, hey, I was thinking about you. There's new requirements. The penalties are pretty severe, up to $10,000, and I want to make sure that I help you avoid those. I have a few other things I'd like to share with you and talk to you about. When can we get on the calendar for that? So your initial reason for the call is to remind them and connect them with a new deadline so that they're aware. That's value add, right? But it gives you an excuse to get in front of them and talk about that and other things. So that's how I would approach it. And let's say you're quoting a premium fee tax planning engagement. You've seen it's not a huge deal. And when we're doing tax planning engagements, we're gathering a whole lot of this type of information. So it really isn't that much additional information to get. And you're paid very, very well to do it. So to roll that in, hey, and I'm going to include all this annual reporting for you just by signing up for this bundled service or for this consulting agreement or for these advisory services, is a great way to introduce it. Here's your options. PFW. Is there anybody out there that knows what the PFW notation means? Pop it in the chat if you recognize this. I'm going to tell you, this was like the most exciting notation that I could get when I first started my career. It means pass further work. And when I had a reviewer reviewing my work, Nate, and they said PFW, I was like, yes, because that meant done. I didn't have any review notes. So you can certainly pass it on, or you can take it on as an opportunity to really shine, add value. You get paid more. You can certainly charge separately for that. You could include it with your subscription packages. You can use it to open other services. Maybe you've been wanting to get them on a package plan, for example. Use it in that way. Risks. Providing off-the-cuff advice, that's heavy on the risk side. We sometimes feel really compelled or pressured to answer a client's question. Don't let that happen to you. Just say, that depends. That's a good question. That depends. Happy to sit down and talk more about it. Give yourselves some more time, some more information so that you can actually render an answer there. Risk management, I want you to consider added bank scrutiny. There is a chance that the banks might start to ask for compliance in the form of a comfort letter or other documentation around the BOI form. I just want you to be aware of that. I would recommend the same exact kind of charges for that work, either including it in a subscription model plan or a separate charge for that. But that brings risk with it, right? So you want to make sure you're adequately insured. Insurance companies can be a great source of information too, if you're wondering about things. And to really get you guys started with that, I also wanted to just make you an offer today. We run a newsletter that is tax planning centric. It's called Think Outside the Tax Box. You can find it by going to tottb.tax. And it's articles written by the top tax planning experts in the country. It's a digital magazine. We also write client alerts. And in fact, we've got several articles on the BOI, how to get paid for it, and alerts that you can send your clients so that you are doing your CYA. We're going to offer you a discount and a special package for you today because we've got a new book that just launched. It's written by Peter Riley. If you've ever read Peter's column in Forbes under tax, he's got a brand new book that he's launched. We're going to give you that complimentary. So we will send you a copy of Peter's book plus 10% off. I've got a code for you on the screen. Just go to tottb.tax and use that code. If you're having any issues with it, just contact us here and we can get you hooked up with that. Just let us know you're on this webinar if you're having any trouble finding that. And we have something really exciting coming up too. We're going to be launching Tax Law Pro, which is our tax planning research tool. That's a digital tax law library. So it helps to stay connected so you can be aware of those things when they come out. And it's a great place to stay updated on things like today's topic.
Yeah, and I did want to just say, to amplify, we've had a lot of our clients and contacts within the industry go through Dominique's programs, and I just wanted to add my strong endorsement for her programs and what she does and her team. You guys can all tell from this conversation the level of detail at which she approaches the particularities of these different code nuances, and she's offering that kind of detail along with her team. She mentioned Michael Gordon, who is a longtime friend of mine as well, and just others in that community that we know and love. I'm very biased, obviously, because of long-standing friendship with Dominique, but I have seen a lot of the different various communities related to tax planning, and I find Dominique's information to be the best of the best, in my opinion. So,
Thank you, Nate.
You
and I think we make your
that
job
is recorded. You can use that.
I was going to say, I think we make your job easier too, because when you add in the advisory piece, it makes your marketing so much more effective, right? It's helping you to really offer what people want. And I'm sorry to say that they don't want to have to do the BOI form. This is not sexy. And even tax returns, they don't want to deal with it. But what we found is that when you focus on something that they do want their business problem solved. They do want extra cash to deal with business issues and growth. And when you can give them those things through advisory services, this BOI is perfect opportunity for you to introduce that concept to them. And so I'm excited about it. I know it's additional headache, but I think used in the right way, it's an opportunity for you to shine and really give people the service they deserve.
Yeah.
Connect with me on LinkedIn. I'm happy to connect you guys up with resources and help out where I can. Obviously, I can't answer every individual question that comes in, but I'll do my best to get you connected up with resources. Think Outside the Tax Box is certainly one of those and one of the ways I can help today, but I would love to stay connected. So just find me on over there. I'm Dominique Molina, the tax planner, not Dominique Molina, the rapper or the basketball player. That's how you'll know.
That's amazing.
Too short for basketball.
I would love to see both of those activities attempted by
know.
you.
I might have to do a wrap someday. It'll be all about value pricing and tax. You can bet on that.
100%.
Yeah.
Well, thank you, Dominique. Christian, you're the CEO. Any final words, brother? Sir?
No, this was great. Dominique will need to do it again. Everyone, if you
Absolutely.
joined late, yeah, Dominique, we'll definitely do this again. If you join
Absolutely.
late, just be aware we'll send the slides out. We'll get those from Dominique's team. We will post the recording in our members area. We'll also email it. Dominique will probably use it herself. We'll get that to her. That's in our Zoom, Dominique. So Victoria, I'll get that to you as well. And guys, we'll
Thank you.
go connect with Dominique on LinkedIn, take her up on her offer, because this stuff really matters. And I'll leave it there. But I mean, more to come. And we'll do another one of these soon. And thank you again for everyone's time. You especially, Dominique. That was so valuable.
Thank you so much for the opportunity, guys. And thanks for spending part of your day with me.
Thank you. We'll see y'all later.
Take care.
Okay. Bye-bye.